Hello everybody, in this video I wanted to do a brief stock analysis of Restaurant Brands International, ticker symbol QSR. And this is not necessarily going to be a deep dive into their financials, but more so me taking a brief look at the company and giving my general outlook for it. So before I take a look at the stock itself on Yahoo Finance, I wanted to briefly comment on each of the brands within the international brands itself. So the first one is Burger King. Burger King is QSR's biggest brand, as well as it has the most opportunity. It very closely resembles McDonald's business model. And it also has the biggest international presence. I would say that Burger King could potentially be as big as McDonald's. It's a little bit of a stretch, but definitely the biggest international presence here. Next up is Popeyes, really strong presence in the southern United States, but surprisingly to me, they actually have a presence in 30 countries worldwide. Apparently, all over the world, they love the taste of that Louisiana chicken, which was a little bit surprising to me. I thought they were just here locally in the United States in a handful of states, but apparently they've got thousands of locations. So definitely a lot of growth opportunity here. And currently the smallest of these franchises, and in my opinion has the least growth opportunity, is Tim Hortons. If you don't live in Canada or in the northern United States, you may not have heard of Tim Hortons. They don't have a super strong international presence, and it's also the smallest of these three brands. Dunkin' Donuts and Tim Hortons are struggling when being compared to Starbucks growing internationally. And although they are doing extremely well in Canada as well as in a handful of US states, I really don't see a ton of more growth here. Now taking a look at the stock itself, here we can see that at the end of 2019, beginning of 2020, they reached an all-time high of $80. And if we look at 5 years ago, they were at $41. So almost doubling within the last 5 years. Definitely seeing some long-term growth here. And then here recently, they were at just $25. Restaurant brands in general across the board were really struggling, even though this is predominantly fast food restaurants or drive-in restaurants that shouldn't have been mainly affected. Restaurant stocks across the board were really harmed by COVID-related issues with restaurants closing down, but the stock is already strongly rebounded up to $57, and there's no reason to believe that it shouldn't be back up to $80 within the next year. Now looking at revenue and earnings over the last 4 years, we're seeing really nice increases in revenues year over year and pretty steady earnings. And then we're seeing pretty steady revenue and earnings for the last 4 quarters, and it may seem like there's a dip in Q1, which you may think is a little bit disappointing, but a lot of restaurants out there are seeing negative earnings for Q1 of 2020, so staying in the positive cash flow here with about $100 million in earnings is actually a really strong plus for QSR right now. Now I'm just going to take a look at a few positive and negative points by analysts at Morningstar. So the first point here, the bulls say, Burger King's master franchisee joint venture structure has put operational and capital responsibility in the hands of well-financed operators. So this is really especially focused on internationally, but also here in the United States. It really strongly resembles McDonald's business model. They're just using franchisees and giving them a little bit of a capital investment, and then the franchisee operates the store, while Burger King provides the right to use all of their products. And then the second point here, QSR is being aided by 3G's Stewardship, which is an exemplary management company. Restaurant level operational improvements have lifted Burger King's franchisee returns. And with each store having better returns and that being QSR's biggest brand, that's obviously going to help the stock price increase over time. So definitely a huge plus for international brands here teaming up with 3G. And then I also wanted to take a look at a couple of the negative points by analysts at Morningstar here. The first one being bankruptcies among QSR franchisees could escalate for COVID-related issues, and that is possible, but I think for the most part, we're not going to see a huge dip or a huge gain actually in bankruptcies. I think there may be a few, but I think overall QSR wants to keep their restaurants open. So I'm sure there are financial opportunities for restaurants that are struggling right now for COVID-related issues. And then the second point here is the global QSR industry is competitive with a long history of aggressive discounting competition among McDonald's, Starbucks, and Dunkin'. And the first one, I completely agree. Competition between Burger King and McDonald's is absolutely cutthroat, and they've really got their work cut out for them. But with Starbucks and Dunkin' and Tim Hortons being QSR's smallest company, I really don't see the competition there. They kind of have their different markets, with Dunkin' and Starbucks and Tim Hortons all being in the same area, but them all having enough market share. And I already said that I don't really see Tim Hortons really gaining a lot of market share from those other companies internationally. So I'm just kind of ignoring that point there. And the last thing I wanted to do is to take a look at the research review overview on Robinhood. So they give it a 4 out of 5 star rating, which is really, really strong. And I think part of that is becoming from the fair value of $65, and with it being about $10 lower than that right now. And also with the exemplary rating from their stewardship, which has recently changed because, as I mentioned, they partnered up with 3G. And then they also have a narrow economic moat because of their franchisee model, and uncertainty is medium, which I would disagree with. I would say it's pretty low, but Morningstar tends to say high or medium uncertainty risk on just about every company out there. Overall, in my opinion, I probably would not invest in this company just because I think there's some better opportunities out there, but this company does look really strong with some really great growth opportunities. I'm currently trying to make a video on all of the companies in the Dow 30, so be sure to come check out that playlist on my channel if you are interested. Thank you so much for watching, and subscribe for more content.